Our recent finance trends study, in which we surveyed 1,300 global leaders, identified a few critical trends. 57% of finance leaders have identified the fact that they are being included and asked to participate to a greater extent in the strategy of an organization. How have you seen that trend play out?
Well, I'll just start with my perspective on strategy, which is strategy is not something that exists on a piece of paper. It's what you do. And I can't think of a better expression than where it puts its capital, where it puts its resources. And the CFO is responsible for that. And so I would imagine that the number should be 100% in the survey. Now, whether they're just not recognizing that they're actually doing strategy and calling it something different could be the case. But to me, strategy has to be in the real world about real choices and investment allocation. So the CFO absolutely has to be, if not at the center of it, then at least part of the cadre of C-suite leaders driving those choices.
And has that required the finance teams in general to have or develop different skills?
Absolutely. They've got to be able to not just control costs, but see the potential for returns. And those returns are based on a logic about the future. If we invest here, it'll cause this kind of customer behavior to be different, which will get us a competitive advantage. So they've got to be at the table with general management and the other functional leaders to really pressure test that logic and translate it into a financial return case for where they allocate their dollars.
So another part of our study showed insights that when the CFO's office or the finance team is involved in initiatives like cost cutting or margin improvement, they get more inspiring results than if they're not as involved. How have you seen that play out in the evolution of how organizations that look at sustainability as an example?
Yeah, I think sustainability started its journey a long time ago as a moral issue. And it's evolved since then to be a disclosure issue. And where it really needs to get to is it's just a business issue like everything else. Sustainability has the opportunity to reduce cost by reducing waste in the organization. Think about a circular manufacturing where you're reducing waste on the other end. Sustainability has the opportunity to reduce risk. So think about if we can mitigate wildfires or mitigate droughts, or bolster our supply chain against those risks, then it has the opportunity to enhance value. And increasingly, sustainability has the opportunity with certain sets of consumers to enhance revenue because it's a feature that segments of consumers want. So enhancing revenue, reducing risk, reducing cost, all of those things are value drivers. And what the CFO and their team needs to be responsible for is translating the logic of sustainability into a business logic that, creates returns. And we think that there's tremendous opportunity for that.
Just another great example of an expanded impact on strategy by the CFO's office.
100%. And you like to bring it to life, you can imagine a world where the tails of climate risk are higher, more extreme weather in various different shapes and forms in different locations, whether it's flood risk or wildfire risk. That risk needs to be mitigated in operations. So whether it's, how many days are we anticipating our plants to be able to be open every year? What happens if our employees can't come to work? How do we specify our products so that they perform in different situations? All of those are related to sustainability in some way, shape, or form.
That really helps bring it all together. And for more insights on top observations that our CFO research has shown, see the full Finance Trends Report.